Welcome everybody to another episode of Cannabis Unlocked. I'm here with, I'd say, an industry legend at this point, Seth Yakatan. Seth's been in and around the cannabis space for quite some time, providing a lot of, I'd say, institutional quality guidance to portfolio companies. We've worked together on a few opportunities as well. Seth certainly has some very strong and I'd say well-grounded opinions on what's going on in the industry. So today we're going to be covering really kind of a state of the union on what's working, what's not for cannabis. And without further ado, Seth, would love to have you kick it off by just giving some background on your bio, etc., how you got involved in the space, and then I'll let some questions rip for you.
Wow. Well, I think, Tiby, what I'm going to do is I'm going to have you be my hype man now. You're kind of a Colorado-based Flavor Flav. I'm really feeling a little more energy. So that's good to know. But thank you very much for the kind introduction. So yeah, no, I guess I've been now on rec cannabis for probably going on 10 years. I got into it completely accidentally. I was a institutional investor for the first 11, 12 years of my career. I then morphed into becoming an advisor for emerging growth companies in the life sciences space. And it was through me hoping that I was going to figure out how to create a therapeutic drug out of cannabis that got me into the sector initially in 2012 and started a company doing that and liquefied about $60 million of capital to not be successful, which is a typical story in our industry. And then somehow landed inside of ease through serendipity, the intersection of hard work and luck just landed me in the right place, right time, right thing. And I was able to help them get through a wormhole and stayed in the mix there. And subsequent to that, was also very lucky to be able to get inside a glass house and help them to do some things. And that's just been probably, one of the two or three best stories in the industry. And the only thing I can tell you about that is that they have an amazing team. And you've really can see the difference in the industry between institutional caliber companies and people that are just figuring it out. So I've just gotten really lucky, man. And so I'm just happy to be here. And, the other thing is that I keep finding good stories, as you do too on the capital side. Everyone's talking about how bad it is and how crappy it is and how, hard it is. And I just keep finding companies that spit cash flow, and that to me is the real story about what I think is interesting. So
Yeah, I think that's probably where Seth, our roads have crossed, or I guess our paths have crossed more often than not, which is we're fundamental bottom up guys. We like to see, show me the money, and a lot of folks in the cannabis industry haven't really been able to do that. So I've actually got some time carved out in the podcast here to dig a little bit deeper into that. But taking a step back, before I even dive in, what are you working on today? Kind of what are you excited about? Anything you want to talk about quickly before I dive into some of these questions?
well, a good portion of my time is spent helping Glass House. We just were able to execute a New York Stock Exchange listing, and we're the second company to be able to do that. We also put out a press release that said, I think we shipped our first pound of either smokable hemp or smokable CBD over to Europe. So, what is interesting that I find in cannabis is it's kind of hurry up and figure it out. Some press release comes out that the government's going to do X, and then seven experts stand up and say, here's what you need to do. And nobody really knows. Other than Eric Berlin, no one seems to know what's going on, right? He's the only guy who I think actually is like my source of truth. So shout out to Denton's
Yep.
and Eric for that, because he's like the totem pole for me. But international is really interesting. And the prospect of any company in the US being able to either undertake interstate commerce or export outside of the US, I think blows this whole thing wide open. So, what's interesting to me is looking at how the pieces of that stack need to line up for a company to do that, whether it's Glasshouse and it's a large cultivation company, or whether it's someone else. Given some of the consulting things that I do, whether that's an interstate basis or an ex-US basis, that's become interesting. The other thing that I think is interesting is that you're an insider's insider, and you're one of the few people, and I do say this publicly behind your back, you're one of the few people who's like really writing checks, like sincerely, like earnestly writing checks in a good way. And, you're seeing a lot of this international conversation where LPs from Canada are coming down and we're trying to figure it out. You got four guys from Europe a day calling you and this. So there's a lot of stuff going on in the background relative to international that I think is probably really exciting to me because it becomes probably the greatest catalyst that we've seen.
Well, that's actually a really good segue, I guess. So, for someone who hasn't been paying close attention to the industry, kind of tuning into the podcast, what would you describe as the state of the industry today? We're coming out of the rescheduling hearings. What are your expectations there? Incremental reform, and what really drives the potential for that international business? And I guess let's add in a layer of complexity. How are we going to compete with our neighbors up north who have these massive million plus square foot facilities that are currently shipping international today? How do they fall into the mix here?
So I think you kind of asked two questions there.
I think I
So
asked like five, so we'll let
pro,
you
pro,
take it
pro,
however you want.
probably. Um, and I had an answer to your first one, and I kind of forgot it.
Yeah,
So
what
maybe
what's
what.
going on today? 101. What's happening with
So so so
rescheduling all that?
so look, I've taken what I would call a messianic religious approach to cannabis reform, meaning that Islam, Christianity, and Judaism all purport that there's a Messiah that's coming, right? But you just got to wait. And that's the way that I look at cannabis reform. It's coming, but you got to wait and you got to believe. So we're the furthest along as we've ever been in that process. And I don't know that anyone really knows what S3 means. Given how stupid our industry has been, I think what it means is that the federal government's going to make this thing S3, and then every state's going to have to figure out what they want to do. And there might be five, six states who kind of say, yeah, I'll give you a DEA license, or yeah, I'll unchange what I'm doing. But I think it's going to be a bit of a mess. I clearly do not believe that pharma is coming in to take over the industry. I've been in pharmaceuticals and pharmaceutical drug development for too long. Cannabis is sold, whether it's recreation or medically, as a consumer product without intellectual property around it. Pharmaceutical companies need composition of matter patents to be able to sell product. It's just two different business models. So, that's one thing. The second thing is that I think Canada is set up right now for failure. And I'm probably the first person who's ever going to say this.
Interesting.
Why? Why? Because you are you have one of two models. You either have very, very, very large scale production that you're shipping over there. And the reason you're able to ship over there, not really is cost. It's just the fact that you have product that meets standard.
Hmm.
And then you have a bunch of people that seem to be what I call aggregators or like wholesale aggregators. So, hey, I'm a distributor. I'm going to go around and pick up 40 or 50 brands in Canada. I'm going to either EUG cert them or EUG cert them when I'm over there. And I'm just going to warehouse that and middleman it. Right. And not to tout Glasshouse, but once a significantly competent U.S. large scale cultivator begins to do two things: send higher quality product there with a lower price, that market's going to be impacted. And I also believe that given the brilliance of our presidency, that someone in the European Union stands up and says, wait, shouldn't we buy cannabis that's made in Europe and not made in Canada and the US? And there becomes an import restriction on that. So I think Canada has, and rightly so, benefited from the fact that they're in year 8 of that cultivation cycle and they've figured it out at scale. And look, I've been in the Kronos facility. It's really good. I haven't been in the Village Farms facility. Really impressed with what they've done. And I think those two, probably win. But a lot of these other trading businesses, and businesses that have survived on effectively, selling irradiated mids that happen to test at 26%, like that game's going away. Because I'll tell you right now, I can drive 2 hours north of here to Carpinteria, and for 500, 600 a bag, I can get stuff that's going to blow that away, and it's selling for 4 or 5 times that over there, right? So I think it's going to be interesting to see how that plays out. I'm not convinced that the lead that Canada has is going to be maintained.
No, it's kind of funny. We've been looking at some Canadian operators recently, and I would definitely say there's one or two that really stand out as being exemplary as far as their manufacturing prowess and what they're able to do at scale. Really interesting, although these operators are really servicing the domestic market more than the international in Canada, while everybody's focused on international. These guys are taking market share domestically, but I kind of feel similarly that we are producing a higher quality product here. I can personally say I've been over the border and tested some of the product over there, and I've not been particularly impressed by everything, but there is some good genetics up there also, but it's
There,
far and few
there
between.
is. I mean, you were very complimentary in your in your comments, introduction to me. I think one of the things that I've done is without any expectation of anything in return, mention things and companies that I think are interesting to me and shout them out. So, like, there's a whole bunch of people in British Columbia that are growing good product. There's a little company there called Rubicon Organics, who
Rubicon's
has
great.
yeah, Margaret Brody, who they're growing great stuff. My team's been in that facility. I think most of her product goes into her own product, but like that's, you know, as good a quality product as you're going to find anywhere. But she's
We'll have to
also,
trade notes on some other operators up there, but without getting distracted
I'm
from.
gonna tell you something, Tibby. I always got time for you, sir.
All right,
If you
sounds good.
if you're not a one rule, look, if you're not a one ring pickup for me or a 5 minute or less text response, we got a problem.
I appreciate that, Seth. It goes right back to you. So. I guess let's go back to U.S. landscape. What is working today in this environment that we're in?
If you're a large MSO and you haven't taken on too much debt, I think you've reached equilibrium in that you're able to exist. Uh, I think you're seeing a group at the largest tier in Vireo, Trueleaf, GTI, Pureleaf, you know, separate themselves from the pack in
Hmm.
terms of size. I don't know if you saw today or yesterday, Anthony Varell put out a really nice piece on Todd Harrison's Substack about what Vireo has done. They're going to be the largest MSO by the end of the year. Just book it, right? Timestamp July 22nd, 7:10 a.m. By the end of 2026, Vireo will be the largest MSO in the world, period.
What do you think
So
about the integration there?
I'm not betting against John Mazarakis.
John
Uh,
John's
I'm
a smart guy, so
I'm conflicted and I'm restricted and I own stock in the company. And because of the Glass House deal, they're partners. Huge amount of respect for what him and Tyson and that team are doing over there. Wildly impressed. I do think you could say integration is a risk. I'm not betting against them because I've seen what they've done in 5 or 6 of the assets that they bought, and Proper seems to be doing just fine in Missouri. Just
yeah.
fine.
It's kind of funny what happens when you bring a strong operator that has legitimate, operating procedures, better distribution, better economies of scale, what that can mean for a business that's run by typically bud
Another
tenders.
another piece that the pundits aren't articulating. Good friend of mine named Josh Hershey, who runs Timeless, used to do M&A for a small company called Amphenol, tiny, and they ran this decentralized M&A structure where we're going to come in, we're going to buy you, we're going to pay you your number, and run your business. Like it's the antithesis of private equity. I'm going to come in and tell you what to do and micromanage. I'm going to let you keep your culture, keep your team. You need to hit your number, run it, right? I'm going to provide you the support and I'll give you some economies. And I think one of the playbooks that he seems to be running effectively is this decentralized consolidation system, which, seems to be working. Time will tell, but I'm not betting against that team.
I'm not familiar with that, actually. And maybe I'm just not thinking about it right. It sounds more like a franchise model almost that he's trying to put in place.
I don't know that I want to call it a franchise model, but traditional private equity, I think the analysts and the Bain consultants come in and they figure out a way to, get rid of everybody's pension fund and screw all the vendors and make everybody take less money so they can scrape more to service debt. I think these decentralized M&A consolidation models have, it's kind of like, think about how Medtronic runs a business unit. You're the CEO, you show up with a budget, you make all the decisions that you want for the year, you run your business. You just have to hit the number that you showed us and we're good, right? And I think that's a little bit of a different way of doing things than traditionally. Like I don't think Vireo's coming in and saying, I know how to run your business better than you know how to run it in your state, right? Like I think they're saying, run your business.
Yep. Yep. Makes sense. So, you said it early in the intro here, but cannabis is becoming a cash flow game instead of a storytelling game. What does that mean in practice to you?
It means that the winners are making money and the winners have figured out how to make money and are going to continue to figure out how to make money. And I keep seeing more and more companies that are figuring out how to make money. We have had probably the highest articulation of that in the gummy segment. If you look at the 7 or 8, I guess outside of Kiva and Sunderstorm, with no shade to either of those companies, every single one of those companies has other companies has been acquired or merged because there's just so much cash flow there that model has worked. So, Wana, Wild, Groon, there's probably 3, 4 more I'm missing there, right? I keep seeing flower companies that do really well. There's a company I'm going to shout her out in California called Cam. That is just an absolute beast. It's the number one selling flower brand in California. We just ran some hoodie data that said normalized for non-MSOs, she's the number one selling flower brand in the United States, and she's only in California. Okay. So that level of execution I'm seeing do really well. I can't talk enough about Timeless, Jaunty, Heirloom, some of these brands that have either been asset light or moderately asset light and dominated a state. I think Rove kind of crushes it. I think Arrow crushes it. I think there's a couple of people on the single or multi-state operator, and I talk a lot about that Missouri matrix that do really well. So, between Illicit and Vivid and Suede Bee Leaf and Elevate, you have 4 companies that are doing really, 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 really well there. So I just keep also, I haven't said this too much, but I also think California retail has reached kind of a state of equilibrium where you probably have 32 to 35 operators that own somewhere between 575 and 625 doors that are all existing. So, if I normalize Stizzy out of there between off the charts and what Bert is doing with PFC and with what Perfect Union is doing, and I have to say Catalyst in there because he's also doing it. What those groups seem to be doing, Lennar and Sam at Wellgreens, Sod at Cake House. There's this whole group of kind of equilibria that seems to be existing, and people are holding out for bigger numbers, don't want to sell, haven't really had to take in cash and have figured it out. And it feels to me like those cash flow stories are where a traditional lower middle market private equity fund is going to be looking at things. And I keep bumping into more and more and more and more and more of them, right? More just they keep coming. So
Groups that are floating around to you, looking for opportunities.
yeah, groups that are floating around looking at opportunities. I mean, I just got off the phone with a nice young man named Ben Cat who's got Koa and Dompen. There seem to be a couple of really interesting asset light brands out there that are moving into a couple of states. There's another really good company called Dabstract does the same thing. So I keep seeing companies that are making it work. We haven't talked about Rusty and Old Pal for a while, but I think he's like the number 6 or 7 non-MSO selling brand in the United States, flower only, with no other pieces. And it's not a lot, but that thing's profitable. So I just keep seeing you read the headline about okay, cannabis is distressed, and this I keep seeing winners, and the winners seem to keep winning.
Yeah. So, it's we could probably spend a lot of time on this. So I wonder if there's like a higher level answer just for the sake of the podcast. But, state by state, how these businesses are run, varies. Some force vertical integration, et cetera. Some are still in medical markets only. I mean, what have you seen has been the most effective model to build a cash flow positive business in this environment that we're in today? And then Do you think with the possibility that 280E could be going away this year, let's not talk about retroactive relief or anything like that. Do you think that you're going to see more cash flow positive businesses emerge just from that alone? Or do you think that it's going to take still operators putting in place better procedures, better models?
I think to answer your second question, I'm not sure that 280E relief alone is going to change the dynamic of people that are not functioning correctly. I think to answer your former question, it's kind of a case by case basis. Usually it's a lot of luck, some of it's timing, some of it's figuring out how to play through what might be some really dark hours. But fundamentally, I think it's not taking on too much leverage. So the one common theme that I could say permeates every single one of the companies that I've talked about is that, you know, if they took on debt, they've probably been less than two times EBITDA or two and a half times EBITDA at a cap. And if they've used that as a as a growth mechanism and they've been fairly conservative in what they've done with it, that seems to be the winning formula.
Hmm.
Every single one of the companies that have high level burned out have burned out because they just used ridiculous amounts of debt capital or too much equity capital without adult supervision to execute a plan that eventually didn't work. So I think that, the theme is very disciplined, whether it's because of constraints, or management utilization of capital in order to preserve value and not lever too much seems to be the one key thing that I could say.
No, it's funny you say that, and I don't think that we say this very publicly, but when we're looking at opportunities, anything north of two times leverage on the books is typically already a desk kill for us. We've stretched to 2.5 before, but um, the cost of capital is just too damn high. So it doesn't, you said it about us. You said there's groups snooping around. The narrative out there is that there's no capital available, but the reality is that there is capital available out there, but it seems to be strategic and picky, far, far selective. What do you think a cannabis company needs to demonstrate today to attract that very selective capital?
I think you have to be north of 10 million in revenue and 20% EBITDA or adjusted EBITDA. Like I think you have to have scale because anything else you're just like hope, right? Hey, I'm gonna open two stores or whatever. I think you probably have to have some level of girth, and it's an expansion round of capital, or it's a growth round of capital, or it's a refi round of capital. I think that's probably the thing. If anybody comes to me with anything that's less than a couple $1 million in revenue, it's really hard. You know, there has been a service, or a SaaS business or two that I've seen that have been below that threshold, and two that I'll shout out that I think have really incredible young founders and have done a really good job of executing business plans and raising money from non-cannabis aligned investors, are Spark Plugs and Canix. I can't tell you how impressed I've been by both of the C-suites in those companies. Um, but outside of that, I feel like unfortunately, there's a size bias.
Yeah, no, definitely. So, the period of consolidation that we're seeing happening right now seems to be mostly around distressed assets. What do you think takes this industry kind of to the next level where you're starting to see great companies merging with other great companies to really kind of reduce the what's the word? The opposite of saturated, the
Just the
very fragmented market that
natural
we're in today.
selection that needs to
Yeah,
occur.
sure.
I think we're all waiting for real strategic and financial money to show up because for the last, how long you been doing this, Tibby? 8, 9 years?
Eight
Right.
years.
Okay, so for the last 8 years, we're bumping into each other all the time, right? The only time that I really saw different faces in the investor room were really, really, really early in 2014 to 2016 when everything was new and euphoric and people thought they were going to get logarithmic returns and when hemp beverages started to explode. So I think the catalyst, I've always kind of said listing is the step. and safe banking is the next step. I think safe banking is the step that then frees up a gate. And does that gate become a floodgate or not? I don't know. But I do think the movement to S3 has started in the rooms that I'm in to get people who have been out of the conversation for 6 or 7 years back in the room. And when you look at what some of the, if you look at what some of the tobacco companies have historically done relative to making investments, and when you look at what some of those investments have been doing to buy more companies, you can start to put some breadcrumb trails together about who's going to move first.
Yep. I think that's what's probably the most interesting about the cap markets dynamics that we're experiencing today is that, we definitely don't have that euphoria that retail was driving a few years ago. I mean, it's completely gone. And look, I can't blame them. Like a lot of these guys got super burned. There's other shinier objects to be chasing out there than cannabis. But unlike that euphoric time when retail was chasing, the amount of strategic conversations that we're having internally today is far greater than I think it ever has been before, which I wish retail understood what that means, which is that the industry is really kind of coming out of this stone age, if you will. I always say it's akin to the aftermath of the dot-com crash. You had all the jokers out there that went by the wayside, but then you had the real companies that emerged from that. And I think that that's really the phase where the cannabis industry is today. You've got real operators that have survived a very difficult period of time. Um, and the strategics that have been waiting on the sidelines are now starting to see those regulatory barriers which allow them to enter the space, get very excited. And guess what? They're doing it at the cheapest valuations than we've seen in years.
And look, I really think that eventually you're going to get that retail institutional group back to the table. I am going to shout out a group called SSC Advisors who puts out, a weekly research piece that I share with some people. Thank you to them. And when I look at that tier one grouping of Curaleaf, Trulieve, GTI, Verano, Vireo, and Cresco as a cohort, that thing trades at 4 times EBITDA publicly. For a couple of companies there, if you look at GTI, like that's nuts, man.
Yeah.
Right. So does that normalize back up to like NASDAQ index level once you start to get some real money in there? I think it does. Again, if I go back to that messianic like vision, they're coming. Like I'm going to church every Sunday. I believe they're coming, but you
Yeah.
just got to wait. But I do think you'll get that when you look at that disparity and you normalize out Glass House and their multiple out of the second tier, that number is even crazier. So, I do think if you're a value investor and you haven't gotten burned and you like public equities, like if you buy today, a basket of Curaleaf, Trulieve, and GTI, and you hold it for 5 years, you're going to be in and you just like lock it away. You're going to be in great shape.
Yep.
But I don't know that stems the short term, pain that people have experienced, or the long term. I'll tell you a funny story. There's a guy, you'll know him, single private family office, has been an investor in the industry for like 10 years, owns 3 or 4 decent sized public positions, and is probably up like 12% over his, entry point. Okay. And I did a call with him like a
Total,
month ago.
not IRR over that time period, right?
Total,
Yeah.
like simple, right?
Yeah.
So
Yeah.
he hasn't lost any money,
Hmm.
but he's so, and I'm like, what are you upset about? He's like, I'm upset because I took money out of real estate because I thought this was going to be a 10 bagger and it's like a point 0.5 bagger. And I'm like, but you're like you're up more than any other investor that I've ever
Yeah.
talked to in cannabis, right? So
Yeah.
it's an interesting dichotomy.
Totally. Relative value matters, though, and every investor should pay attention to it and, diversified basket. So, want to hit on one more thing. You're talking about Glass House, True Leave, uplisting. How do you think that that ultimately drives retail back into the sector? And do you think that we're there? And maybe you want to quote something from Eric Berlin here or not, but I think from our perspective, uplisting is pretty much done. I don't think we need an act of Congress anymore to make this happen. I think if Schedule 3 happens, we see a lot of companies follow suit. Would you be in the same camp?
Maybe let me answer that question differently. If we look at this, progression of what needs to happen before this inflection of capital comes in, I feel like it's a series of steps. And the first step was uplisting. I never really thought that uplisting in and of itself was going to be a euphoric retail occurring event. I think it's safe banking because I think what's eventually going to happen is someone is, and if I'm going to bet, it's probably going to be Boris, is going to figure out a way to do an uplisting with a large institutional round with someone like a Fidelity or a BlackRock as an anchor tenant. And then once that happens, I think you start to see, kind of a trigger effect based upon that. Because, the fact that I can go buy Glass House on NYSE today is awesome. I don't know that a $1 billion market cap company in the context of everything else that's traded on NYSE without a programmatic investor institutional focused, calling program quarterly thing approach does it. And you also haven't offered them a product, right? So I think it's gonna require a couple more steps in that chain. And I also don't know that, again, not to get too inside baseball, also don't know that the deconsolidation transactions that Trulieve and Glasshouse have done are available for everyone. So I think that's a rate limiting step. Another thing, which I will also kind of say publicly on your show, you know, Trulieve and Glasshouse have been preparing for an uplisting for 2 years, right? So look at three factors in both of those stocks. Large institutional professional adult organizations. Okay, number one. Number two, neither of them needed to do a reverse stock split to be able to get there. I think
Hmm.
if you look and my team did like a 5 year trading history on a VWAP basis. For 5 years, both of them have been within the band to list on any of those things by any asset test. And I'll tell you what else, both of them have been Sarbanes-Oxley compliant or getting to Sarbanes-Oxley compliant for the last 2 years. And that's an undertaking, right?
Hmm.
That is not easy. I can't tell you how many times I've met with the Sarbanes-Oxley team in Glasshouse and told all the things I can't do. Right. Right.
Yep.
So like I think the other piece that people aren't understanding about uplisting is that there's also like micro baskets that you need to get into. And with no disrespect to Jushi, you know, okay, you're gonna have to do a reverse split. You're gonna have to get SOX compliant, and you're gonna have to wait, and you're gonna have to do a deconsolidation transaction. So I'm just not sure that it's a magic pill for everybody there.
And
There's a
once
lot
you
of
do
work,
all that, run a real road show before you're uplisting. Go out there and
right?
talk to institutions because I feel like that opportunity may have been missed on one of these recent uplistings here.
Also, don't think that Trulieve and Glasshouse needed to do that, right? Trulieve and Glasshouse weren't doing those deals in order to get capital. Trulieve and Glasshouse were doing those deals in order to prepare themselves for heightened liquidity in the event that they want to do things in the future, right?
Yep.
So in normal corporate finance terms, anyone that that's done a listing usually does a round associated with it. Neither of them did because they didn't need to. And I do think that if you have someone who does it in conjunction with an offering and does all those pieces, and maybe has someone like a Morgan Stanley or a Goldman Sachs or a HBSC or a UBS or someone coordinating that on a global basis, like through their CPG group, you know, um, maybe that's different. Maybe that's, I mean, well, let's give him a shout out because he's probably the best. He's making more money than anybody in the industry. My man Grant at Mullis is on one side or the other of every single M&A deal, right? Every single one. So when you look at the institutional coverage that investment bank has done, they are the leader, right? Canaccord raised everybody equity. Ducera is doing a great job of restructuring everyone else's garbage, but who else is in that zone, right? So somebody's going to step up in that zone. I mean, Goldman Sachs, call your boy. I'm ready to run the desk. Let's go.
Let's do
Let's
it.
go. Right?
Well,
So, I mean, I think it's just a matter of time.
once one of those books is run by the big dogs, I think that also gets a lot of the retail back excited and into the game too.
Sure, I'll tell you why. Because, if we did just a segment on breaking down the technical fundamentals of GTI as a company, like it's a really good company,
Sure.
right? Like Ben makes money every
Yep.
quarter, right? Buys back his shares.
Pays his
Is it true?
taxes. Yep.
So pays his taxes. Like, okay, you know,
Yep. Seth, so next 3 to 5 years, what gets you genuinely optimistic about the industry? And we'll close this out.
consolidation. What I've been the best at doing in my career, Tibby, is helping people buy and sell things and really helping single entrepreneurs sell, private companies to strategics or financials. That's where I've made, my game. And that's the game that I've been playing since the first day I showed up at Ease. So, I think for me, being inside of that from a fiduciary perspective on behalf of Glasshouse, sitting inside the war room of, a nuclear powered US aircraft carrier, to use hyperbole, has been amazing. And the ability to work with Kyle and Graham and Mark and that team has been phenomenal. I'm seeing everything on the board, right? So that's really exciting for me. And then, the opportunity to help some of these operators that I've been, talking to and shouting out for the past couple of years. I think the highest iteration of what we've seen from that perspective so far has been Grown Wild. And that was a transaction which was principal to principal, and they were able to get done. But I think that's the template, because once these institutional players come in, every guy from Tennessee to Denver to San Antonio to Chicago, who has a $500 million or less lower middle market private equity fund, is going to be calling you and me and saying, "How do I buy something?"
Yep.
Right. So that's where I think the excitement comes in. And look, could it be 7 to 10 years to get there? It could, but it's coming. There's just too much opportunity, too many good companies, and the industry's been neglected for too long. So for me, I used to have a plaque that my dad gave me, said the winner versus losers. And the last one was the loser sees three or four sand traps around every green. The winner sees three or four greens around every sand trap. And in cannabis, I just see a sea of green. I don't see
There
any
you go.
sand traps, and that's what I'm playing for. So,
Love
um,
it. Awesome, Seth. Well, I really appreciate you joining us today. If anybody wants to get in touch with you, what's a great way to do it? Well, you got a website, or where should people go?
I have a consulting website called Ordo Verde. I have a capital markets website called Katan Associates. I have a personal branded website called Seth Yak, where we will post this. My email address is public. I have a minuscule presence on LinkedIn. If you're not aware of that, you can DM me. It's me. I answer all of them. There's no AI in there. I wanted to take a minute to thank you and thank you for the work that you're doing at Key. You and your partners. I've been observing and had a nice relationship with you guys for 5 or 6 years. You're really one of the few guys left who's really deciduously writing checks and not writing predatory checks. And you're one of the really good movers from an equity perspective in the market. And I'm glad to see your continued success. Really appreciate you having me on the show. And 24/7, love to be a resource for you. I'm sure we're going to hit a double on something one of these days.
Awesome, Seth. Well, I really appreciate the time. Always learn something from you every time we talk. So, hope everybody enjoyed the show today. And thank you, Seth Yakatan, for joining us today. Cheers.
Thank you, Tip.